All right, so you wanted to understand the real differences between Islamic and conventional banking. Well, strap in because we're diving into some pretty fascinating stuff today.
Yeah, this should be interesting.
We're taking a deep dive into a chapter on Islamic banking from the Divine Blueprint. Have you heard of this one?
Yeah, it's written by Payam Mustafa, but the chapter we're looking at is actually written by Syed Akbar Ali,
Okay.
a former senior banker from Malaysia. And get this, he's worked in both conventional and Islamic finance.
Oh, wow. Talk about having an inside scoop.
Right.
So what's the big takeaway?
He argues that the differences between Islamic and conventional banking are more about how things look than how they actually work.
Whoa, hold on. That's pretty bold.
Yeah, he's basically saying the line between the two systems is kind of blurry. And a lot of what makes Islamic banking seem different might just be for show.
Okay, I'm intrigued. So let's start with the basics. What are the main principles of Islamic banking, and how are they supposed to be different from conventional banking?
Well, the foundation of Islamic banking is the ban on riba, usually translated as interest or usury.
Right.
And that's the reason why Islamic banks reject interest-based transactions. Instead, they say they work on a profit and loss sharing model, where returns are tied to the performance of the actual assets involved.
Okay, so no interest. But then how does that work in real life?
Yeah.
What's the alternative?
Well, Islamic banks use terms like profit rate instead of interest.
Ah, I see.
But here's the catch. Syed Akbar Ali argues that these profit rates are often calculated using the same methods as conventional interest rates.
Really?
Yep. They rely on things like interbank lending rates.
Hold on. Interbank lending rates. Could you explain that for our listeners?
Sure. Interbank lending rates are basically the rates at which banks lend money to each other.
Okay.
These rates go up and down depending on things like the overall economy.
Makes sense.
And they act as a kind of benchmark for determining how much it costs banks to get money,
I see.
which then affects the rates they offer to customers, whether they call it interest or a profit rate.
So even though Islamic banks use different words, they're still using the same financial tools as conventional banks.
That's exactly what Syed Akbar Ali is getting at.
Uh-huh.
He even gives a specific example from Malaysia. One Islamic bank there uses something called an Islamic base rate, or IBR,
Okay.
which is determined by factors like the Islamic cost of funds tied to, you guessed it, interbank rates, and the statutory reserve requirements set by the central bank.
Which are the same things conventional banks use to decide their interest rates.
Exactly.
Wow, that's pretty eye-opening. It seems like the difference might be more about what they call it than what it actually is.
Yeah, that's a big part of his argument.
But if that's true, then what's the real problem here?
Well, Syed Akbar Ali suggests that this obsession with looking different might actually be hiding the true spirit of Islamic finance.
Okay. So what would that true spirit be then?
He says Islamic finance should really be about promoting ethical behavior, social justice, and shared prosperity. It's about creating a financial system that's fair, equitable, and in line with the principles of the Quran.
But if the mechanisms are so similar, can those goals even be achieved within the current structure of Islamic banking? That's something we'll definitely need to explore further. But for now, let's dive a bit deeper into this whole riba concept and why it's at the center of this debate. You said earlier that it's often translated as interest, but it sounds like our source has a more nuanced view.
He does. And understanding his take on riba is key to understanding his whole argument. He says riba isn't just any kind of interest or profit. It's specifically about exploitative profiteering that causes harm and makes the gap between the rich and the poor even bigger.
So it's about more than just the technicality of charging interest. It's about the ethical implications of how profit is made and whether it's exploitative.
Exactly. He gives a really interesting example to illustrate this. Imagine a mortgage with a 4% interest rate. At that rate, it would take 18 years for the loan to double in value.
Right. And most mortgages are paid off way before that 18-year mark.
Exactly. Now, compare that to a situation where, say, a business owner triples prices overnight, taking advantage of a crisis or a shortage to make a huge profit. Syed Akbar Ali argues that this kind of behavior is much closer to the real meaning of riba than a regulated mortgage with a relatively low interest rate.
So the difference lies in the intent, the impact, and the degree of exploitation involved.
Yeah.
That's a very different perspective than simply equating riba with any kind of interest. But where does this leave Islamic banks? Do they consistently avoid these exploitative practices? And if so, how?
That's a great question, and it's something we'll definitely unpack in the next part of our deep dive.
All right, welcome back to our deep dive into the world of Islamic banking, where we're trying to separate fact from fiction. And so far, we've uncovered some pretty interesting stuff, wouldn't you say?
Oh, yeah, definitely. It's definitely more to this whole thing than meets the eye. Remember, we're looking at the argument that Islamic banking, at least as it is right now, might not be as different from conventional banking as people think.
Right. And last time, we left off with that whole idea that riba, which is often understood as interest, is actually more about exploitative profiteering, the kind that actually causes harm. And that really challenges the idea that just avoiding interest is enough to have a really ethical financial system.
Exactly. Syed Akbar Ali, he argues that the true spirit of Islamic finance is all about creating a fairer and more just system, one that really follows those Quranic principles of fairness and social responsibility. But he questions whether Islamic banking, as it is now, with all that focus on technicalities and appearances, actually achieves those goals.
So is he saying that Islamic banking, at least in its current form, isn't really living up to what it could be?
Yeah, I think that's what he's getting at. He even goes so far as to call it a deception of untold misery, which is pretty strong.
Wow, yeah, that's a pretty strong statement. But what exactly does he mean by that?
He thinks that this focus on superficial differences has actually distracted everyone from what's really important, actually building a genuinely ethical financial system. He says that Islamic banks are super careful about not charging interest, but then they often kind of ignore other practices that could be seen as exploitative or even harmful.
So what you're saying is, even though Islamic banks might technically follow the rules about riba, they might still be doing other things that go against the whole point of Islamic finance.
Yeah, that's exactly what he's saying. And he gives some interesting examples to back that up. For instance, he criticizes Islamic banks for taking deposits from businesses that do things like price gouging, stuff that's generally seen as unethical. He says that by taking money from those sources, Islamic banks are basically supporting those actions, even if indirectly, which goes against their own principles.
That's a good point. It makes you think that real ethical banking has to be about more than just checking off a list of forbidden things. It's got to be
Yeah.
about the big picture.
Exactly. It has to be about looking at the whole network of financial transactions and making sure they actually align with a broader set of ethical ideas.
So that raises an important question. What actually happens because of this mismatch between what Islamic finance is supposed to be and what Islamic banks actually do? What are the real-world consequences?
Well, one of the biggest worries is that it could make people within the Muslim community feel disillusioned and lose trust. When they realize that the label Islamic doesn't always mean ethical behavior, it could make them lose faith in the whole system.
Yeah, that makes sense. It's like when you find out a company you thought was doing good is actually doing some shady stuff behind the scenes.
Oh,
It can
yeah.
be pretty shocking.
It can, and that can lead to people feeling cynical and apathetic and even not wanting to bother with ethical consumption or investment at all.
So what's the solution? What does Syed Akbar Ali say should be done? Can Islamic banking be fixed, or does he think something more drastic needs to happen?
Hmm, that's a question we're going to explore in the last part of our deep dive. But before we move on, I want to go back to something we talked about earlier, the idea of profit rates. We were discussing how these rates are often calculated in a similar way to conventional interest rates, even though the words are different.
Yeah, and I'm sure our listeners wondering how that works in practice. Can you give us a more specific example?
Sure, imagine you're getting a car loan from an Islamic bank. Instead of charging you interest, they figure out a profit rate based on things like how much it costs them to get the money, how risky the loan is, and what the current market rates are.
So they're basically considering the same things as a regular bank would.
Yep, pretty much. They just call it a profit rate instead of an interest rate. And oftentimes, the final cost for the person taking out the loan might be very similar, regardless of whether they go with an Islamic bank or a conventional one.
So maybe the difference is more about what they call it than how it actually works.
That's exactly the point Syed Akbar Ali is making. And it makes you wonder about how transparent and authentic Islamic banking practices really are. Are these profit rates genuinely different, or are they just a way to make conventional banking products sound more appealing to Muslim customers?
That's a question each person has to answer for themselves. But one thing's for sure, it's not as simple as saying Islamic banking is good because it doesn't involve interest, or that conventional banking is bad because it does. There's a lot more to it than that.
Absolutely. We need to move past those simple either ideas and really look at the financial systems that affect our lives in a more nuanced and critical way.
Well said. Now, in the last part of our deep dive, we'll get into Syed Akbar Ali's proposed solutions and see if there's a way forward for Islamic banking that goes beyond just imitating what conventional banks are doing. All right, so we're back for the final part of our deep dive into Islamic banking, and wow, it's been quite a journey so far.
Yeah, we've definitely been through a lot.
We've uncovered some pretty thought-provoking stuff, right?
Absolutely, especially from Syed Akbar Ali.
Yeah, he's got some strong opinions,
Yeah.
especially about how the current Islamic banking system doesn't quite live up to its ethical ideals.
Right, and he's definitely not afraid to say it.
No, he's not pulling any punches.
Yeah.
So let's get to the heart of it. What does he actually propose as a solution?
Yeah.
What's the way forward, according to him?
Well, he doesn't lay out like a step-by-step plan or anything, but he does paint a pretty compelling picture of what ethical finance could look like.
Okay, I'm all ears.
And it's not just about tweaking the current Islamic banking model.
So what's the big idea?
He suggests that instead of trying to keep these two separate systems, Islamic and conventional, we should shift our focus to promoting ethical practices in all banking systems.
So instead of Islamic versus conventional, it's more about ethical versus unethical.
Exactly. He argues that the Quran's condemnation of riba, that exploitative profiteering, it isn't meant just for one specific system. It's a universal principle that should guide all financial transactions, no matter what your religion is.
That's a pretty radical idea, to basically get rid of the whole concept of Islamic banking as a separate thing
Right.
and just focus on ethical practices across the board. I mean, is that even realistic?
It's definitely a bold vision,
Yeah.
and you're right, it would require a huge shift in how people think,
Sure.
both from the financial institutions themselves, A&D from consumers.
Right.
But Syed Akbar Ali seems to believe that change is possible,
Hmm.
maybe even necessary, if we want a truly just and fair financial system.
So what would that actually look like?
Hmm.
How do we go from these separate systems to a more universal approach to ethical banking?
Well, it would start with refocusing on those core principles of Islamic finance, things like fairness, transparency, social responsibility, and rejecting any practices that are exploitative.
Yeah.
These principles could then be applied to all financial institutions. It wouldn't matter if they called themselves Islamic or conventional.
So taking the best parts of Islamic finance and integrating them into the whole financial system.
Imagine a world where all banks, not just Islamic banks, refuse to invest in industries that cause harm, like weapons manufacturing or things that destroy the environment.
Okay. Yeah.
Imagine a world where all financial institutions prioritize responsible lending, making sure that loans are affordable and don't trap people in debt.
That sounds pretty idealistic.
It does.
But I gotta admit, it's a pretty appealing vision. It
Mhm.
makes you wonder why we've been so focused on creating separate systems instead of working to improve the one we already have.
It's a good question. And while getting to that vision might be complicated and tough, Syed Akbar Ali's argument reminds us that ethical finance shouldn't be limited by labels or boundaries.
I think that's a really important takeaway for our listener. This deep dive hasn't just been about understanding the technical stuff, the differences between Islamic banking and conventional banking. It's been about questioning what we think an ethical financial system should be
Exactly.
and realizing that it's on all of us to create a more just and equitable financial world. Consumers, investors, policymakers, financial institutions, everyone.
I agree.
So as we wrap up this deep dive, I want to leave our listeners with this.
Yeah.
We've explored Islamic banking, but the conversation shouldn't stop there. This is just the beginning of a much bigger discussion about the role of ethics in finance. We encourage you to keep exploring this topic, ask tough questions about the financial institutions you deal with, and think about how your own financial decisions can help create a more just and fair world.
And if this deep dive got you interested and you want to learn more, I definitely recommend checking out the full book, The Divine Blueprint, by Pagam Mustafa. It's a really thought-provoking read that'll help you understand this complex and constantly changing landscape even better.
Absolutely. Well, that's it for today's deep dive. Thanks for joining us, and we'll see you next time.